Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading systems for MetaTrader 5. In today's educational breakdown, we're exploring an expert advisor called the Wavelet Energy Trend Rider. This is a trend-following strategy with a twist. Instead of a moving average or a classic oscillator, its decision engine is built on a signal processing technique called the Haar wavelet transform. By the end of this video, you'll understand how it reads the energy of price across different time scales, how it enters and exits its trades, and how the underlying code brings it all together. So what exactly does the Wavelet Energy Trend Rider do? At its heart, this is a regime-gated trend follower. That phrase simply means the strategy only allows itself to trade when it detects that the market has shifted from a choppy, directionless state into a genuine trending state. The tool it uses to make that judgment is unusual. Rather than a moving average crossover or a momentum oscillator, it performs a multi-scale wavelet decomposition of recent closing prices. Here's the core idea in plain terms. The strategy takes the last 32 completed closing prices by default and breaks that window down into fluctuations at different time scales, from the fastest bar-to-bar wiggle right up to the slow, half-window swing. It then measures how the price movement's energy is distributed across those scales. When most of the energy sits in the fast, fine scales, the market is essentially noise and chop. When the energy concentrates in the slow, coarse scales, a real directional trend is present. The strategy condenses this into a single number between 0 and 1 that it calls the persistence ratio. This approach is designed for traders who are curious about the analytical side of markets, those who like the idea of a signal that needs no price level normalization and no volatility scaling, because it is a pure ratio of energies. It's built with liquid instruments in mind, such as major foreign exchange pairs and index products, and it's most at home on the 15-minute through 1-hour time frames, although the code never locks it to any single one. As always, remember this is an educational exploration of how the strategy is constructed. It is not financial advice, and like every trading approach, it carries real risk, and losing trades are a normal part of its behavior. Let's walk through the mechanics step by step. On every newly completed bar, the strategy rebuilds its window of the last 32 closes and runs a full pyramidal Haar wavelet transform across them. Thanks to a mathematical result known as Percival's theorem, the sum of the squared detail coefficients equals the total fluctuation energy in that window. The strategy divides that energy into two buckets. The two finest scales, the fastest wiggles, are labeled fine energy or noise. Every coarser scale above them is labeled coarse energy or trend. The persistence ratio, which the code calls P, is simply the coarse energy divided by the total energy. For pure random noise, the energy spreads out so that the fine scales hold roughly 3/4 of it, and P sits down near 0.25. For a clean directional run, the slow swing energy dominates, and P climbs well above 0.5. That single ratio is the gate. Now for direction. The strategy takes the average of the newest half of the window and subtracts the average of the oldest half. If that difference is positive, the underlying structure is pointing up. If it's negative, the structure is pointing down. An entry is only considered on a fresh transition from chop into trend. Specifically, the persistence ratio must cross upward through the EnterRatio of 0.55 on this bar, having been below it on the previous bar. Entering as the trend is being born, rather than chasing a mature move, is the strategy's core design intention for keeping adverse excursion shallow. Two more conditions must agree. The half-window drift must be at least half of 1 ATR, which filters out trends that are technically present but too flat to matter. And the latest close must sit on the correct side of the window mean, above it for a long, below it for a short. When all of that lines up, the strategy opens a single position. It brackets every trade with an ATR-based stop and an ATR-based target, 2 ATR for the stop and 3.5 ATR for the target by default. On top of that bracket, there's a regime loss exit. The moment the persistence ratio falls back below the exit ratio of 0.38, the position is closed because the coarse structure has dissolved. An optional break-even lock can move the stop to the entry price once the trade advances by 1 ATR. Those three layers work together to keep drawdown contained. Let's look at the actual MetaQuotes language code the expert advisor runs. At the top are the input parameters you can adjust in the strategy tester. Window exponent sets the size of the wavelet window. A value of 5 gives 32 closes. EnterRatio, defaulting to 0.55, is the level the persistence ratio must cross upward to arm an entry. Exit ratio, at 0.38, is where an open position is flushed. MinSlopeAtr is the drift floor. Then come the ATR period, the stop and target multiples of 2 and 3.5, the break-even distance, and the fixed lot size. Below the inputs is the decision block. The Boolean crossed up is true only when the persistence ratio was below the EnterRatio on the prior bar and is now at or above it. That's the fresh transition. If it hasn't crossed, or if the absolute slope is smaller than the min-slope floor times ATR, the strategy simply returns and waits. Then it reads the latest completed close and compares it to the window mean. Go long is true when the slope is positive and the close is above the mean. Go short is true when the slope is negative and the close is below the mean. For a long, the code takes the ask price, places the stop 2 ATR below and the target 3.5 ATR above, and calls trade.buy. For a short, it takes the bid price, places the stop 2 ATR above and the target below, and calls trade.sell. Notice both sides are perfectly symmetric, the same logic, simply mirrored. Now let's bring the whole thing to life on a chart. Below the candles, you can see the wavelet persistence ratio plotted in its own panel, ranging from 0 to 1, with the enter level marked at 0.55 and the exit level at 0.38. Watch how that ratio behaves as price develops. We open on the left with a cluster of small, overlapping candles. Price is drifting sideways, ticking up and down without commitment. Look at the persistence panel here. The ratio is sitting low, down around 0.25 to 0.3. That's exactly the signature of noise. The energy of these little moves is concentrated in the fastest scales, so the strategy reads the market as chop and stays flat. It is patient. It has no interest in this kind of aimless action. Then, on the fourth candle, something changes. A stronger candle pushes up and closes above the window mean. In the panel below, the persistence ratio jumps and crosses upward through the enter level at 0.55, having been below it the bar before. This is the fresh chop-to-trend transition the strategy waits for. The slope of the window has turned positive. The newest half is now averaging higher than the oldest half, and the drift comfortably clears the minimum ATR floor. All conditions agree, so the buy entry marker appears. The strategy goes long as the trend is being born. From here, the market rewards the read. The next candles print higher highs and higher lows, a clean, orderly advance. Notice the persistence ratio in the panel climbing and holding well above 0.55. The coarse, slow swing energy is dominating, confirming the trend is intact. The strategy simply holds. Its target sits 3.5 ATR above the entry, while its protective stop sits 2 ATR below, a reward to risk of roughly 1.75 to 1. As price reaches up into that advance, it tags the take profit marker and the long trade is booked. Notice too that once price had advanced by 1 ATR, the break-even lock had already slid the stop up to the entry, so the trade was protected on the way. Now the character shifts. After the peak, the candles stall and roll over. The persistence ratio rolls down with them, sinking back below the enter level and toward the chop zone. The earlier structure has dissolved. The strategy is flat again and simply watches. Then the mirror image unfolds. A firm candle breaks lower and closes below the window mean. In the panel, the persistence ratio crosses back upward through 0.55. Energy is concentrating in the slow scales again, but this time the slope is negative. The newest half of the window is averaging below the oldest half, and the close is beneath the mean. That's a downstructure trend being born, so the sell entry marker appears and the strategy goes short. Price then works steadily lower, candle after candle, printing lower lows. The persistence ratio stays elevated, confirming the downtrend has genuine coarse scale energy behind it. The stop rides 2 ATR above the entry, and the target sits 3.5 ATR below. As price presses down into that target, the second take profit marker prints and the short is booked. And had the trend instead faded early, The regime loss exit would have closed the position the instant the ratio slipped back below 0.38. The strategy's way of stepping out the moment its reason for being in the trade disappears. So across both trades you can see the same discipline pattern. Wait and chop. Act only on the fresh transition into trend. Ride the move with a bracket and a break-even, and step aside the moment the structure fades. That brings us to the end of our breakdown of the Wavelet Energy Trend Rider. We've seen how it decomposes recent price into energy across time scales, how the persistence ratio gates entries to the fresh birth of a trend, how direction comes from the wavelet's own low-frequency drift, and how an ATR bracket, a regime loss exit, and a break-even lock manage every position. Remember, everything in this video is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries risk, and losses are a real and normal part of trading. If you found this analysis helpful, please like the video, leave a comment, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.